All right, we'll go ahead and get started here today. Welcome. Happy to have everybody. I'd like to introduce Peter Benjamin, president of Acuma. Peter, be honored to have you kick off our call today.
Keith, thank you very much. Well, everyone, again, welcome to another Acma Inside Track. This one's sponsored by our friends over the Blackfin Group as well as Constellation Mortgage Solutions. And I tell you what, when it comes to this topic, technology in general, but mistakes lenders are making. I can't wait to sit back and actually listen to this and really take in some of the advice from our experts. I look at the community page that we have over at Acumel all the time. I get several emails a day about new technologies or credit unions that are looking for some form of new technology. If you're listening, I promise you'll find this extremely valuable. Keith, I'm going to turn it back over to you. Really looking forward to this one. And thank you and Constellation Mortgage Solutions for sponsoring today's.
Good afternoon, folks. My name is Keith Kemp with Blackfin. I'm excited to facilitate today's discussion, as Peter just mentioned, on a topic about common mistakes when selecting new technology. Before we get into all the juicy details, let me first start by introducing our special guests and the panel speakers today. First and foremost, we have Kelly Himbaugh. Kelly is Chief Revenue Officer at Constellation Mortgage Solutions. She leads sales, marketing, implementations, vendor relations. Kelly's been in the residential mortgage space for more than 20 years. She is a force to be reckoned with. I know that firsthand as a good friend of hers. When it comes to driving the need for new tech in the mortgage space, and as evidenced by what they're doing with Nova Constellation, their new LOS, which was also recognized as a 2023 Housing Wire Tech 100 mortgage winner. Kelly is a member of Progress and Lending Board and a multi-year award-winning mortgage executive. Next, we have John Islanian. John is another good friend, Chief Revenue Officer at Simple Nexus. In his role, John leads all revenue efforts at Simple Nexus, and he also has well over 20 years of mortgage technology experience. John brings an unmatched understanding of the needs of the mortgage industry, whether it's really interacting with a team member, longtime customer, or new prospects to Simple Nexus. John always finds a way to meet the needs of all the parties that he's working with. John brings just a wealth of benefits to the platform users that they work with on a daily basis, and I can vouch for that firsthand based on the clients that we've had with introduced Simple Nexus to. We also have Denise Bergsma. She is Mortgage Services Manager at AAC Credit Union with almost 30 years of experience in the real estate industry. I don't know whether to say I'm sorry or congratulations, Denise. But she began her career as a realtor, worked as a residential and commercial escrow officer and closer, and has moved to a management position at AAC Credit Union. This is what's really great about having Denise today. She really strives to provide the ultimate customer experience by tailor making products and services to ensure smooth loan processing. So she can really relate with a lot of the folks that are on the phone today and some of the challenges that you have when you're looking at technology. Next and last but not least, we have Andrew Weiss. Andrew is a partner at Blackfin. He runs our mortgage technology consulting practice. Andrew's really recognized for his design, build, and launch of a little known technology called Desktop Underwriter at Fannie Mae years and years ago. Andrew's been consulting lenders on mortgage technology selection for well over 20 years at this point. Andrew manages our Tech Stack Navigator service at Blackfin. And really, it's a service that's specifically designed for credit unions to help them with selecting the best technology for their organization without it costing you an arm and a leg. So if you are thinking about new technology, you'll want to talk to Andrew. Hey, I just want to take a quick second. Welcome our special guests. Absolutely great to have all of you here today.
Thank you, Keith.
Thank you.
Thank you.
Absolutely. I think we're going to have fun with this crew. Good group. Folks, as you can see, we have an all-star cast on this panel with a wide range of valuable perspectives on mortgage technology. And really, our hope is that you will walk away with 1, 2, 3, maybe key insights that help you with your future technology investment decisions and your decision-making process. And oh, by the way, if you would, everyone, please keep us on mute. And if you have questions as we go through today's discussion, feel free to go ahead and enter them into chat, and we'll address those toward the end of today's call. So just before we get into some of the dirty little secrets of technology selection, let me take a minute to kind of help set up this discussion. make sure that we're level set and we're all on the same page of how we think about mortgage technology and its selection. First, I think we need to remember that selecting lending technology is no easy task. It's why, for me, over the last 20 years, CEOs in the mortgage banking space, credit union space have told me time and time again, Keith, selecting a new technology is a horror show. It's hard. And, or I'll hear the comment, I only have maybe one or two more of these in these kinds of projects in me. All comments that have good reason. Unlike any other industry, one single US mortgage loan transaction requires the largest data set to complete a transaction in the world. Another way to think of it is it's harder to produce a $150,000 mortgage loan, $150,000 mortgage loan, than it is a $1.5 million commercial loan. So please don't be too hard on yourself when you think about the complexities of selecting new technology. But with that said, also, new technology decisions cannot be taken lightly. So that's the first point I'd like you to keep in mind in kind of the setup of this discussion, if you would. The second point that I want to make that I'd like you to keep in mind during this discussion, in my last point before we jump into the questions here, but we understand credit unions are currently selecting new technology at record paces, and we know why. Us here at Blackfin, most credit unions are looking at technology once every 3, 4, or 7 years. At Blackfin, we're looking at them every day with all the technology selection engagements that we have. But we understand that the old Prime Alliance platform is outdated and folks are needing to move off it. So as of today, most credit unions really think that their options are somewhat limited to what they're hearing others are doing. Maybe they're moving from one platform to Encompass, which can be a little bit of an older platform, or Blue Sage or Black Knight. We've heard those. We know they're doing a lot of marketing in the Acuma space, and it's all good things. But folks, those are also very heavy systems that the average credit union doesn't realize the amount of work that's required for the system setup, the requirements, the management, the maintenance that's required. A lot of times that's why the vendor is going to bring a big consulting firm to the table to help with that. The vendor doesn't make any money till they get live, so they will push as much off till after they pass UAT. Fact is, there are other options and tech stack strategies for credit unions that can be far more effective and less costly and less oppressive to implement, manage, and maintain. So, not saying there's any wrong selections, it's just helping you go in with your eyes wide open, because at the end of the day, over 70% of mortgage technology projects do fail. And not massive failure, but they miss budgets, they miss timelines, etc. So all those are critical components to keep in mind. This isn't an easy discussion, but that's why we wanted to bring an all-star cast to the table today to have that discussion and try and help you with some key insights. So, okay, enough with the level setting and setup. Let's go ahead and dive into this topic. Kelly, John, Denise, Andrew, let's address the question that mortgage teams I know are asking at credit unions, but they really struggle to get an answer. Technology expenses continue to really increase as a part of the total cost to originate a mortgage. We see that all the time. Is it worth it to keep buying all these technologies? Are there particular technology expenditures that have a higher positive impact than others? And can technology really drive costs down, or is that just Denise? Why don't you start us off as the mortgage services manager at a credit union? I'm sure you struggle with the same questions when it comes to your technology investments and the decisions that you guys make at your team. So, how do you answer that one or a couple of those questions for the folks on this call?
Well, first of all, I think that the lenders should be more concerned with what kind of service they're going to get from their vendor. Are they going to be around when you have problems or you just can't make it work? Because honestly, that vendor can make or break the whole transaction. We just went through it and we were lucky, very lucky that we had a good hand holding through the whole thing. they should be concerned with that the process going to be simpler for the employees, and they should be more concerned if it's going to bring a great service to our members and make us look good, because we're only as good as what we are that we can give to the members to get more business. We're a smaller fish in the pond. So I really just think the technology has to be brought out and not be concerned about the expense when you can look at the rest of the picture and make sure it's going to fit for you.
Oh, that very good points. I really like that. John, Kelly, as vendors, how do you answer these questions for your clients?
Well, I'll go first. I think that to Denise's point, it's really about the vendor you choose, and are they going to be there for you? But it actually starts before you should even look at the technology. You really have to start internally before you go off and just get in front of vendors and really make sure that as a team or as executive teams or managers and all the way down to your users, what are really truly your pain points? Are these pain points, are these things that are holding back our business? What do we really have to go out and tell the vendor what it is that we're trying to fix or trying to improve for our business? I know on our side of the business, we go through a long, pretty detailed discovery process before we ever open up the software. And I can't tell you how many times that the prospect comes to us and says, we just want to schedule the demo. And we really try to push back with that to get, first of all, through that discovery process, because the worst thing that you can do is show up in front of a vendor and just say, show us what you got.
Well said. That's a very good point. And that does happen a lot. We see that. And so having to go in with eyes wide open and have a game plan so that you as a lender, as a mortgage team of a credit union, you need to be a good partner by setting it by being open and transparent as well in your communications, and not just go in saying, show me your goods, right?
Exactly. That's really hard for the vendor because a show up and throw up presentation is not going to be good for either side.
Very good. So a lot of pre-call planning there to make sure that there's a mutual synergy that's starting to build and not just kind of a show us your wares. That's good. John, your perspectives there?
Yeah, totally agree with Denise and Kelly. Thanks for having me today. It's fun to be on this panel with this crew, especially Kelly. Kelly and I have been in the LOS space for years, competing against each other before I moved over to the POS space. So this is a topic I'm super passionate about. Like Kelly and I are fortunate because we both come from companies with a history of delivering what was, promised on the front end. And oftentimes we're like on the back end of that 70% of the failed projects. So to answer your question, I'm a firm believer technology can definitely lower the costs, right? But not all technology, right? And so lenders are facing that $8,000 or $11,000 to originate a loan these days. It's wacky, the costs. Every credit union has to come up with their own personal workarounds for their internal processes and systems that are lacking. So sit down with your team, like figure out the 5 or 10 key areas where you want to see improvement, and then find the vendors that can solve for those problems and measure them, right? See if it makes sense for you to make a decision with that vendor. Another challenge we see is you're buying a new system to replace an old one, and someone on the team is in love with a feature with the old one. They can't imagine living without it, right? So the lender's trying to solve for one-offs, and they end up not winding down the old system. So now they're paying for two, right? And that just blows up your ROI. And then you end up supporting the two different workflows. So dealing with that up front can pay dividends.
So you got to have a very tactical plan around your technology, adoption and then migration off of the other platforms so that you don't have these dual expenditures going. But obviously, what I'm hearing too is, in order to help keep those technology expense costs down, is you've really got to have a tight project plan, and the communication is what I've heard from Kelly and Denise as well. So, Andrew, you're dealing with a lot of clients nationwide on a lot of different levels as you're advising on technology selection. So I know you see have a lot of different perspectives. So what would you say are some of the keys to making sure that you're helping, make sure that people aren't buying hype, or that they're really maximizing the ROI opportunity with the technology purchase that they're making?
Sure. So first of all, I think that all three of the panelists so far have made really good points, and they need to be internalized well by people who are doing any kind of significant implementation of new technology, selection of new technology. But let me add a couple of things as well. Part of the question was around hype, and I think there is so much hype around technology in our industry that it is hard sometimes to figure out what is hype and what is reality. And the first part of that is really knowing and understanding yourself. So Kelly talked about discovery, and John talked about knowing your workflows and what were those workarounds that people did. Denise talked about really understanding, what you're doing. I cannot stress enough how difficult it can be for an entire team to be honest about where they really are and where they really want to be. Honest with themselves, not just with the vendors. And so I think that's a big thing. There also is hype coming from the vendors. Sorry, guys, but that is true. Not everybody, but I think that you need to understand how that matches with your goals. And so the things that you really want to do, how does that match with what the vendor says are their real strengths? And how do you get to that point where you have this sort of synergy, was a word you mentioned, Keith, but this alignment, this match, if you will, between what is being offered by the vendors and what are really the goals of the lender. When you get that match, then the implementations work, then you get the ROI that you were looking for, you're able to do the change management. If you don't have those things, then you're sort of pushing a rock uphill, if you will, and it makes it much more difficult to get the benefits that people are seeking.
Well said. And Denise, I hate to put you on the spot here, but how do you deal with that hype issue? You know, when everybody on your team is, oh, I love this vendor and I love that vendor, this feature, that functionality, and but they're kind of one-offs as opposed to what the whole entire best solution for the organization would be. How do you manage those expectations with the mortgage team as you go through that selection process?
We had some nice conversations about what we wanted for the future and what our system needed to be able to do for us and what our current system did not have. And every time we hit a little roadblock or a stumbling block that the old system was so much easier, is the words you always hear.
Right.
You sit there and you go, but we need these other things. We need to look to the future. We need to be able to find things that we can do that are going to help all of us out. So we always push past it. And we're a much smaller team, so it took a lot less than some other companies that have more people. But we didn't have a lot of vendors that would even pick up the phone to talk to me because we were small. And there's just not a whole bunch of options out there. And I am just so excited that we had a couple that I could compare. And I am very excited at what we selected.
Very good perspective to really have all that pre-planning in really defining what you want and who do you want to be is part of what I heard in that comment. Who do we want to be to our customer base with the customer experience? And then let's look at technology selections that fit that viewpoint. John, Kelly, how do you deal with the hype? Because I've been on your side of the table too, where you go in and you love, you hype it up. Your part of your job is to express benefits of your platform, but then you end up with users in a room who are going through the demo and they start to make various assumptions, and you kind of got to bite your tongue because you're like, I hear what you're saying, but this thing isn't the best thing. That it is the best thing since sliced bread, but it doesn't make you. It won't make your dinner and serve it to you as well. So how
Or
do you
clean
deal
the
with
cat
that?
litter box.
Yeah, exactly. So how do you deal with that? How do you manage those expectations with the prospect and the credit union when they're thinking about and they're salivating over the potentiality of a technology, and we all know this is an iterative process on the implementation to get to those ultimate benefits, right?
There's a ton of hype out there. There's a lot of companies that have raised a lot of money, right? So they can put that flashy presentation together. So buyers just need to be trained for that, and be able to cut through the flash and get down to the details of their needs and their requirements. So this industry is just notorious for bad software, right? But there's a lot of good software too. It's just work to find the right fit for your credit union. So, credit unions are a special breed. It's an expansive network of friendly, uncompetitive lenders, and you guys act like family, right? Some are better than others in terms of using that network to help them select a partner. So, in terms of delivering a successful project, this is going to sound really silly, but just not checking references. We see a lot of credit unions like ask for the reference, but then they just stick it in the file and then they go ask for approval to buy the technology. Like, everyone's busy. Like, take that next step, sit down with those references, not just a phone call, even just an on-site visit. You can learn a ton by spending some real time with them. I've seen that work really well. And then the other thing is too, vendors typically won't give you a bad reference. So find your own, right? Get some from the vendors and then get some from your own network, and have detailed lists of questions you want to ask, right? Have those prepared in advance, and lead the witness a little bit too. Hey, what could have been better with implementation? Tell me what that looks like on the other end.
I think it's really important, but understand that fit for you may not be fit for someone else. So look at what really is happening and how they match up against what you're seeking. So the references are absolutely fabulous, but don't do them in a value, good, bad sort of way, but more about how does it match your goals. Sorry for interrupting, Kelly.
No. The thing that I will share in working with credit unions, especially now in the smaller credit unions, a lot of times in what we see are mortgage operations that are kind of sort of have been launched or sprouted up inside the regular credit union space alongside the other lending departments. And mortgage is kind of a special breed. We see a lot of pressure sometimes coming from the overall credit union back down to the mortgage operation to say, well, you should just get on what our core offers, instead of really looking for something specific that is really, really matched to mortgage, because it might not necessarily tie in with everything else that we do. And I think the key to that is really looking for a vendor that's got mortgage experience behind it. If you're just looking for the software vendor that's just trying to tie you into everything else that you have, but I think looking for a vendor from a mortgage technology side that has mortgage people on their staff, they understand mortgage compliance, because there's so much more regulatory that applies to mortgage that sometimes some of the other people making the decision, the credit union, they don't have that oversight to maybe know what could be coming at you down the road. So it's a really, really key piece that if you're in the mortgage department and you're fighting to look for a mortgage solution, is partner with somebody that's got mortgage experience on their implementation teams or customer service teams that can really help you tell that story, because it's always typically going to go back to an executive, to a board or an executive committee that's going to be a part of that decision-making process. So I think that is really important when you're looking to select that vendor as part of your final decision.
That's a great point, Kelly. And always at the center of that influence is what's that member experience going to be, right? And making sure that that is your guiding light in the selection process. But I can reinforce your comments around making sure that you're a good partner. We're having open lines of communication to make sure that a technology vendor is going to be a good partner. Now, there's some things you can't anticipate in that particular engagement. We're helping a very large regional lender with selecting a new technology. I asked, what do you want out of the mortgage vendor? Do you want them just to deliver technology and you're going to maintain it? Or do you want somebody that's going to be a good partner to you, as Kelly alluded to earlier, as well as Denise? And the vendor said, hey, and they validated in so many ways that they're committed to a partnership with their lenders that they support. But then there was management turnover at the vendor. And so sometimes you have to plan for those unintended strategic changes that take place at a vendor. And then what's your backup plan going to be able to fulfill that? So you've got to analyze the risks when it comes to these projects. And when we do select somebody, what's the risk related with that based on these priorities that we want out of a technology vendor? And then what's our plan B in the event that one of these these good match variables falls through for whatever reason? So good dialogue, great opening question, great points. Thank you. Let's transition to the second question here. So mortgage teams are littered with these failed IT projects. I mentioned the 70%. John, you understand some of the keys to success and making sure that somebody's in the 30%, and Kelly as well, with the success that your team is having in Constellation with your implementations. But so these failed IT projects are either over budget, missed deadlines, or even just never completed. How does technology selection influence the project's success? We kind of hinted at that during a couple of the points that were made on the first question, but how can a lender choose among the many competing offers? How can they go through a better selection process? What are a little more of those prescriptive questions that they need to be asking? Or are there key skills that a lender must have in-house to deliver a successful project? Is there a special mindset that lenders need to have when buying technology? So with that question, Andrew, I'll start with you based on your broad experience with the lenders that you consult on a regular basis.
Thanks. It is a good question, and obviously this is going to be very specific lender by lender. I would, at the expense of a shameless plug, bringing in somebody who has the perspective and knows all the different vendors and knows a lot of the possibilities can be a real plus if you don't have those skills on your own team. So that would be one place to start. We've already talked about the need to have the right fit, both in terms of support, in terms of resilience in case of issues. So that fit thing is really big. I think the last piece, and this is a comment, someone made this in the chat as well, is that understanding how hard some of these projects are and coming in with a mindset around commitment to success of it is actually really clear. It is all too common, I'm afraid, where sort of the executive sponsors, and to some degree this is driven by a lot of that hype we were talking about, think that things are easy. Oh yeah, I can implement that in 90 days. Well, maybe you can implement an absolutely vanilla thing that hasn't gotten all of the cultural changes through your organization, let alone any of the specifics that make your credit union who you are, done in 90 days. But to get all the rest of that stuff is going to take 6 months or 9 months. And so having that realistic expectation about what it takes as you really move through. The other thing I would just add quickly is that this expectation that you're going to do it once and walk away is wrong. You need to be ready to, as I like to say, land and expand. Get something in that works. Get something that you can try in a pilot sense, hopefully, right, without putting everything at risk, and then tune it and tune it and tune it. But tune it in real life, not just in the sort of abstract. So a lot of people think they know exactly what they should be doing, and they get there and they find out that it isn't quite what they expected. So figure out a good way to start small, learn from that real implementation, and then adapt it, change it, expand it into other areas of your business. It's easier to say than to do, but it's really important.
Yeah, to your point, there's the old saying, you have to eat the elephant one bite at a time, right? And so part of it too is if you've got an experienced vendor, rely on because to Denise's point earlier, everybody kind of wants to get back to the way that they did it with their original system. Rely on that vendor. You're making a change for a reason. What best practices do they have to get you on a much more direct path to being live? I think the other big key here, especially for organizations that don't have IT or development resources, make sure you really understand the difference between highly configurable and highly customizable. Because when someone says this is a highly customizable system, that should raise a lot of alarm bells. That's going to probably need you to expand your footprint of technical resources behind the scenes. And those are not easy hires to go get. You want to look for systems that really have the ability to do certain things with set it and forget it. Or if I need to come back and make a change, it needs to be able to have a very high percentage to be able to be managed, a mortgage system by a mortgage person in the mortgage department. That's a really, really important key. But when you hear that it's a highly customizable system, that is a very different thing than highly configurable.
Really well said, Kelly. I mean, that is very prescriptive advice. And we even see that on our end at Blackfin with our professional services group, because firms call us to say, hey, listen, we bought this LOS and now we're realizing we need this integration, we need this custom field, we need these things. And so now they're in this, oh my gosh, I got to fill these gaps until we can really get live and launch this with all of our branches, our couple of branches, etc. So I absolutely I subscribe to what you just said 100%. John, what's your perspective? What prescriptive questions or recommendations do you have for folks on the call?
Yeah, I totally agree with Andrew and Kelly. We see buyers just be too front end focused, too focused on the technology product and not the delivery on the back end. So just asking what their process is for implementation, or they give you a project plan. This is going to sound like silly things, but like that'll tell you how buttoned up they are or are not on the back end. What sort of resources are they going to bring to the table? And it's also a two-way street. Credit unions are going to have to bring resources to the table too. A lot of these platforms, they need your information to be able to configure and set it up. So you just have to know what that is going in. Nobody's got resources just sitting around for the next project, right? So you just want to go in with your eyes wide open.
That project plan, I think you're spot on. I mean, the couple folks that, as we've gone through the Tech Stack Navigator service and recommend, I mean, your project plan is tight and buttoned up, and you guys blow through it within 30 days. So that really does become a good benchmark when you're evaluating the different systems. I think that's a very, very valuable point there. Denise, can you share from your perspective some of the best practices you learned as a result of your orchestrating the implementation? And what are some of those key things that are still fresh in your mind after implementing, to make sure that that are prescriptive recommendations for folks that helped you help your project be successful and so efficient?
A lot of work. It was not in a long implementation process, but it felt that way some days. But I think that you can be successful if you gear towards the mindset that it is going to be a lot of work, because that vendor needs to set it up and you need to work with them the way you need it to work, what you need. And they don't know what you need if you don't know what you need. So that is all the points they made about you've got to write your notes, know what you want, know what you need, and be prepared. It is not just a wave a magic wand, which I had hoped many times it was. But we got through, like I said, that some people understood that I didn't have the technical knowledge that I needed to get through. So I had them speak in mortgage language to me, and it made more sense, and we could get through and we could set it up. But it's important to be able to communicate on the same line and in the same language.
Denise, I think that's a brilliant point right there, because one of the things I found when I first got into the mortgage technology side is that a lot of these people, unlike me, had never closed a loan before. They really don't know the what challenges we deal with trying to originate a loan, trying to get that application, and then they understand their specialization of supporting the loan process, and they're really good at it, but they've never actually worn the hat of having to process a loan or originate a loan or close the loan. So I think that's just great wisdom that folks should be able to take wholeheartedly and say, make sure that if they're talking software talk, that's great. break it down for me. Make sure you slow it down and make sure that the vendor is breaking it down to your speak and in your language and in your world of mortgage lending. So that's just another great point. And what I like to advise clients when we're working through technology projects in our consulting is think of the world in three different communication levels. There's the 50,000-foot level, which is the high level executive, broad stroke overview, the excitement, the hype. Then there's the 500-foot level, which is the middle management, which needs to know a little bit more details. But then there's the 5-foot details of my role and my expectations and what I need on a daily basis to be successful. And sometimes you'll have to take a software vendor and their team and bring them down to the 5-foot level to help educate them. And as you go through that discussion, you'll start to get a better understanding of, are they working with me or are they just trying to sell a software? And that'll become another, benchmark for you to measure against as you're thinking about different technologies that you want to select. So just an open thought there. But any other key pieces of advice that you have for folks at a more prescriptive level before we move to the final question to kind of start summarizing all this? But any other comments or points?
I would make one point, which is there's a real difference between sort of these little point solutions and platforms. But in every case, I think a credit union needs to take a holistic view. It's about the business goals. It's about the culture and change management. It's about the function and the technology. It's also about the implementation versus the ongoing production. You got to look at all of those things in a big picture, even if what you think you're acquiring is just a point solution. And I think that's challenging to do. It is challenging to get all the right people at the table to make that decision from all these different perspectives. But I think if you don't have that, you can end up going down sort of dark alleys, if you will. Not necessarily because it's a bad choice, but it's a choice that isn't fully informed by the rest of it. And so it doesn't fit with the rest of the whole for the credit union. And it's hard to do. I don't want to underplay the difficulty of what I'm suggesting, but I think it really is helpful and maybe even absolutely necessary.
I would agree with Andrew. Just kind of going back to the beginning, if we're working with the largest data set in the world to manufacture alone, like double clicking on when you ask, like, do you have an integration with this vendor or that vendor? Double click on that. Just because they say they have an integration doesn't mean it's all the data that you need.
Yes.
Right. So,
No.
and if all the data isn't exchanging, if it's going from your POS to your LOS, how is that landing in the LOS? If it's not all landing there, your team is doing the rest of the work. And now you're introducing all these workarounds you don't want.
Right.
So just double clicking on integration questions.
As you look at the partner, and to Andrew's point, as you look at, you have to look at the whole platform and the whole project. I think what everybody right now, and I know the member experience is so important, and getting and a lot of people make selections too because they're trying to hold on to that top originator or to acquire better originators. But we're in a place where I think in the industry and the economy at this point in the mortgage industry where everybody is kind of downsized as much as they can, and now we actually see an uptick right now in technology decisions because everybody's a little bit slower during the refi boom. Nobody had time to talk about making a tech transition, so we're getting really, really active in that space. But are you really selecting a platform that a year from now volume doubles and volume comes back again? And the great news is for the credit union space, now that everybody's not getting a call from some independent lender out there because they refied today and now another loan officer says, I'll refi you again tomorrow for free. People are beginning to migrate back to their institution, to their credit union for the loan. So you're going to see your volume grow. Make sure that your platform is set up once it gets through processing and into underwriting, closing, and post-closing, that it is going to be a system that's going to be able to help you grow with volume without having to add back office FTEs. That's a critical point because that adds expense. And the other thing is it's really, really hard to get those people up to speed. You really want your system to take care of that for you with the
A
staff that you have.
scalable system is what I hear.
Absolutely.
You know, what we missed is what's out there for the future. And I'm sure people will be knocking on the door to all the credit unions in the area now, but you got to not just plan for the now, you got to plan for the future. I don't want a platform for just what can take care of what I need today. I need what is going to attract members, attract future loan officers. What will we have to give them that's more than what we had before?
Oh, that's great. That's excellent. Well, I know we are running tight on time, just a few minutes left. And honestly, well, I had a third question, but reading ahead in a little bit here, we've actually addressed all the questions and points that we really wanted to cover in the third question, which is around what are more of those prescriptive recommendations and mistakes that we often see credit unions make when selecting technology. So I think we've got that ground covered. Andrew, can you check the chat, and do we have questions that folks are hoping to ask our panel today?
Yeah, there are a couple of questions that have come in, a bunch of just comments as well, and thank you for those comments. One question is around what's the impact on loan origination volume of the member satisfaction? And, are there technologies that are most important for driving that member satisfaction? We've sort of talked around it, and we've talked a lot about sort of the more operational efficiencies. We all know for sure that member satisfaction is so critical for credit unions. But do the panel have specific thoughts on what technology really help that? And I certainly do, but let's start with other people. John, do you want to address that first?
Yeah, sure. So, a little shameless plug for Simple Nexus. So like our industry is always so behind the times because every time there's a refi boom, the fish are jumping into the boat. They don't want to do a rip and replace and do new technology, right? So now's the time when we see lenders retooling. But we talk a lot about, there's different channels in mortgage banking, retail, wholesale, brokered out, et cetera. But we talk to lenders about mobile as a channel. Right? We all have mobile phones, supercomputers in our pockets these days. There's a native mobile app for anything, so why not mortgage, right? So ICE puts out their borrower insights study. I think it's at 73% of Gen Z and millennial borrowers said that being offered a native mobile app influenced their decision to work with a lender. So just thinking about those things, the absence of an app could mean you're turning away someone in that category, in that Gen Z or millennial category. And that's all about the best consumer experience, the best consumer engagement. You could be working with the realtor and the LO and the lender for 30 to 45 days. You might as well have the best experience.
And I'll add to that. I think again from the member experience, myself as being a credit union member, you still though appreciate the fact that you can walk into the credit union and talk to somebody. So if you're in that process, you want to make sure that you've given other people if I'm doing my loan through the mortgage department, there might not be a mortgage person in every single branch. You want to make sure that when you're able to, if I want to walk into the credit union and have somebody check on my loan for me, they're not scrambling to say, well, we're not tied to the mortgage department. There needs to be seamless ways across the credit union operations to make sure that staff they do have a way that they could access for those statuses or be able to get a communication to that member really easily.
Yeah, let me add something, and folks who've worked with me know that this has been my little soapbox, but the recent MBA Tech, they did a study and we're still on purchase loans. The average time to close is 46 days. And my contention is that is terrible member service, we should be ready to close as fast as that purchase borrower wants to close. And, there's no reason why you shouldn't be ready to close in 15 or 20 days. And I think that a lot of the time is taken in sort of outdated manual processes. Checking on the checkers is one of my favorite phrases that we should just do away with. But technology is clearly required to accelerate that. If your member sees that they're approved within minutes and that they're ready to close in a couple of weeks, then they are comfortable with that process. That's great member service because it takes anxiety out of that process. If it's 46 days and on day 22, it's can you please send me that gift letter kind of thing. That's what drives people crazy. There's been some studies done that the single worst thing that a mortgage originator can do is ask for the same document twice. But yet it happens on something like 50% of all mortgage applications. So there are lots of little things you can do. They add up to big things, but that focus on cycle time will not only get you better member service, it actually ensures that your process is more effective and therefore less expensive to operate.
Denise, anything we missed on that or anything to add before Andrew addresses the next question?
No, and I have to agree with him. 45, 46 days, it seems like an awfully long time to close a loan.
Yeah.
Everybody wants to get in, everybody wants them right now, and you've got to be able to get that to them.
And it's
So
particularly heightened with the Gen Z millennial borrowers that are now making up a majority of purchase applications. So, this is they grew up with Amazon and Apple and, press a button and get it delivered. But, Zappos, right? They are circling your street with the shoes that you ordered, just waiting for you to say yes to buy them. So that's
Exactly.
the mindset of our borrowers, and we should just confront that.
But I'll chime in just real quick. I won't get on a soapbox here because I could, but part of our delivery services group and they're helping deliver technology. We have a change management group who helps guide organizations through the change process and adoption of the new technology because it comes down to the trust factor so that we can get away from the checker. So I think that folks on the phone, that's another key component is to remember you have a change management process you have to guide your people through so that they will trust the updated and newer technology that you're implementing to remove that safety blanket of checking the checker, which slows down the process tremendously. So I'll jump off that soapbox on change management, but do keep that in mind.
Are there particular technologies that the panelists find are most impactful on reducing costs?
Seems like everyone's trying to solve for the work number right now.
Yeah.
Anything that can reduce the cost of that settlement service. We're seeing a lot of traction, waterfall credit and verifications, that type of thing.
Well, I think too, it's really as you move into work with, if you're moving to get a new loan origination system, look at their partner stack. If they have integrated vendor partners that offer multiple services, work through your LOS vendor to work with that vendor. If they offer credit, flood services, there's some good discounting out there if you can use the multiple integrations that a particular vendor would offer, say, for instance, through a loan origination service platform. Ask your vendor to help you with that. Those are the kind of things you can do bundled services now and really save a lot of costs.
I'm still finding, I'm still learning. I was amazed by what we have available to us and the implementation and ordering things and online. And I'm with Kelly. If you can bundle things, it makes it a lot cheaper. But using your program and the work platform that you have helps in the long run to use every aspect of it. You get more bang for your buck. You're not just using it to originate the loan, you're using it for more. So look at everything that they have available.
And go back and ask all the time. Once you're, once you're past this, you've made this technology change. And to Denise's point, you want to do it the one time for a long time.
Yes.
Always constantly challenge your vendor and go back and say, what do you have coming down the pipeline? We constantly go to clients and find out that maybe they've had some staff switch, or we just haven't asked them in a while. There's a new integration out there. There's a new service that you could use, and they may already be using that vendor, but they're using it outside of the main platform, and it just needs to have the integration turned on. So again, you have to work as partner with your vendor to always really understand what what's going on in your vendor's world, and encourage them to make help you with roadmap items that are going to make your platform better long term.
Yeah, I think that's a great point. The other thing, to sort of almost come full circle at the end of our time, John, I believe, or perhaps it was Kelly or both, mentioned about people having old processes left in place in a new world. And I think it's very easy to look at how we save $1 here and $1 there. And those are all very valuable dollars, don't get me wrong. But we're sometimes really missing where we could save, 10 hours of manual effort and lots of money that comes with that by actually looking at our overall process from soup to nuts. So rather than a technology that saves lots of money, look at your process and how you're using technology, sort of to reflect on Kelly's point. How can you take advantage of the technology you have in place to save lots of money? And I think those savings are frequently out there, but they take a little fortitude to actually, both discover and then go through the change management process to get put in place.
That's right. Well said. Wow. Another great point is, to help summarize this entire call is, don't just buy technology, be a good partner in your buying process, in that partnership with each of the prospective vendors. It's going to be very telling as you go through that relationship building process in the purchasing process. So, folks, this hour went really fast, and I just want to express my sincere thanks to Denise, Kelly, John, Andrew, Acuma, great group at Acuma. Acuma community is always active in answering questions and people sharing and asking for feedback and perspectives on different vendors. But again, as Andrew said, not every vendor is the right answer for your organization because you're very different than another credit union organization. So, hey, thanks so much for being on the call today. Look forward to it. There will be a recording. It'll be reposted on the Acuma Archives website. So if you missed it, you'll be able to join it from there. Hope everybody has a great day. Thanks for being with us today.
Thank you for
Thank you,
having
Mom.
us.
Thanks,
Appreciate it.
everybody.
Thank you.
Have a great day.